Are you paying too much on your mortgage? Want to know if you can lower your monthly payments? There may be ways to make your home more affordable. Today, I'm going to explain a few of the options available to you. Hi, I'm David Candler Hicks of Alliance Legal Group. We are a Florida-based law firm that focuses on helping clients avoid foreclosure, often through the loan modification techniques I'm about to describe to you. After the housing bubble burst, millions of Americans found themselves with enormous mortgage payments on homes that were suddenly worth significantly less than when they were purchased. This made refinancing a home loan almost impossible for many. As a result, the federal government created a number of programs to help Americans modify their home loans or escape from them entirely. One of those programs is called HAMP, or the Home Affordable Modification Program. HAMP is the only modification specifically designed to lower your payments. Traditional bank loan modifications might extend your repayment period or help you get out of a backlog of debt, but reducing your monthly payments was not the main goal. HAMP, on the other hand, provides incentives to banks to modify loans for homeowners with an eye specifically towards reducing monthly payment amounts. Of course, if you don't qualify for HAMP, or you need relief that is different than what it can offer, you can sometimes seek a bank's internal modification. An internal modification is going to be an agreement between you and the bank to modify your loan. The terms of this agreement are designed to help you get your payments back on track, not to specifically lower your monthly payments. Nevertheless, it can have that effect if structured properly. In some instances, the bank may extend the terms of your loan. This could both allow you to roll missed payments to the end of the repayment cycle and reduce your monthly payments by extending the period over which they are being made. Alternatively, rather than extending your mortgage, a bank may be willing to reduce your interest rate. This will usually lower your monthly payment. Some banks may require that your mortgage be current, or that you get it current before the new interest rates will apply. Finally, in some cases, the bank may actually agree to reduce the principal of your loan. We have seen this happen, but it is not the norm, so don't get your hopes up. Still, it never hurts to ask, and reducing the principal on a loan could amount to an enormous savings over the life of the loan, plus a healthy reduction in your monthly payments. These are just a few of the options available to you when trying to reduce your monthly payments. It's important to not give up, and I recommend getting some competent help to get you through it. I'm David Candler Hicks with the Alliance Legal Group. Have a great day.